Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have Adam Aspes on the line, and he's a partner over at Fintech, and this interview is part of our iConnections Miami series, where we bring you the best of those who attended and participated in iConnections, which took place in Miami. Adam, welcome to the show.
Appreciate the opportunity to be on the show. Long-time listener, first-time caller.
Oh, man. Well, let's have some fun today. So, of course, we're going to get into what you're doing over at Fintech, and interested in your story as well and how you pivoted your career from 20-plus years and as an investor in banks to being an investor in Fintech. So definitely want to get into that. But to get us kicked off here, iConnections in Miami. What's your connection? Have you been to an event in the past? Have you been part of the community for a while? Maybe give me some of the backstory. Let's start there.
Yeah, so my career, been in venture for 5+ years. Before that, 20+ years as an investor on Wall Street. I'd been to the Context conference before, which sort of predated iConnections. And I got to say that it was my first time back post-COVID, and I was thrilled with the outcome. Like, we met with really, really high-quality investors. I felt like it was materially better than I remembered via Context. And so we had a great time, and we'll see what happens over the next several weeks and months, but really felt like we met with high quality allocators, which is why we were there. Yeah, amazing. What do you feel? I mean, obviously, throughout your career and just in general, you've been to a lot of conferences, a lot of events. What do you think made this one a little bit different or a little bit unique? It's just the number of people, the number of high quality contacts. You just, there's no other place, I think, across the year where that many people come together. It's an incredible atmosphere. Yeah, it kind of blew my mind, too. It's the first time that I've attended and covered this event, and I just kept hearing about it. People were like, Adam, you got to go to iConnections. You got to cover it. I'm like, what is this you guys are talking about? I'm like, what's the big deal? Then I went, and I'm like, the technology, the app, the, meetings. I was like, it was just well done and highly productive, in my opinion, use of time. And as I've been interviewing, other people and bringing them on the show from the event, most people agree. Absolutely. Yeah, it would take me months to hit all the people that I met, all within 2 days. Yeah. So let's switch it up a bit here. Maybe start off by telling us a little bit more about Fintech. Tell us about the company. Sure. Fintech is a venture capital firm focused on fintech. It is founded by former entrepreneurs and operators that previously built, ran, sold fintechs. So we bring an enormous amount of previous career experience on how to build early stage companies, how to build sales forces, KPIs, corporate governance, everything that young companies struggle with to get to the next level. And then we'll talk about a little bit about my journey, but we're a little bit unique also in that our LP base includes roughly 100 banks across the country. Those 100 banks have 1.8 trillion of combined assets. There's a couple non-banks like Fiserv, Q2, Piper Sandler, Stifel, Figure that are also strategic LPs for us. And those strategic LPs just are incredible in helping us drive deal flow, negotiating better terms like performance warrants, and then ultimately in helping us increase the number of customers for our portfolio companies and helping them drive revenues. Go a little bit further into that. To me, what you just kind of described is it's a huge advantage. Go a little bit further into the structure and why that's so important, especially for the companies that you potentially invest in. Yeah, well, we run a very high engagement model. So myself and others on the team, we're frankly full-time jobs are working with our bank LPs and understanding their pain points and opportunities. What we're really trying to do, and we do either monthly calls, quarterly calls, we've got 8 working groups based on business line leaders covering areas like payments and wealth tech and lending and deposits and data and analytics and every area around the bank. So we bring in those business line leaders, we do survey work, we do webinars, we have an annual conference in Nashville, which had 425 people last year, including the chairman of the FDIC. But we do all this collective work to really understand the pain points and opportunities where our banks want us to be investing in early stage companies and where we can solve problems. So, it used to be where are you using paper, where are you using Excel spreadsheets? Now it's increasingly where can we bring AI to the table to increase efficiencies or reduce efficiency ratios and cut costs in the back office. But all this data gives us an incredible advantage versus competitors because we know exactly what the banks are looking for, and they're increasingly likely to be customers when we find the right companies.
Yeah. What risks, and that whole technology gap, what risks do you find that banks have that don't maybe start heading towards and, modernizing when it comes to technology?
Yeah, well, it's a huge issue. Maybe I can give you a little bit of my background and tell you how I sort of came to this conclusion and what we've been doing about it. But as you mentioned, I spent 20 plus years on Wall Street as an investor, had a lot of different jobs as institutional equity research, sales, trading, investment banking. But over those 20 years, built really deep relationships with community banks at the CEO, CFO level. And for most of that time, I focused, as most investors do, on loan growth, margin, credit quality, M&A. Those were the drivers of bank stocks. And rarely did anyone speak about technology. But in my last career before I moved to venture, I was at a hedge fund private equity firm called Jacobs Asset Management, or JAM. And through that, I was on the board of a bank in Louisiana. And I sort of saw how the sausage was made for the first time from the inside, and started asking lots of questions around technology. And it's like, once you see it, you can't unsee it. And, at the same time, we were also investors in Fintech. So I would go to the Goldman Sachs Fintech conference and started meeting with companies. This is 10 plus years ago. Started meeting with companies like Brex and Ramp and Robinhood. And you started to see this modern software that was so superior to what the banks were offering. At this moment in time, most banks still, or many banks, weren't offering any loan origination, deposit origination online. Like, you still had to go into the branch and fill out paper. And you just started seeing these two divergent areas and saying, like, if the banks don't fix their tech stacks, they literally could face obsolescence. And so why aren't they doing it? And then you start to get into, most banks have tech that was initially built in like the 50s and 60s and 70s.
Wow.
Every bank core is based on COBOL technology, which was from the 50s. And they just don't integrate well with modern software. And the other thing you had that happened, this is a little bit of like a side note, is if you look at the history of banking, the U.S. passed the Interstate Banking Act in 1994, which allowed banks for the first time to buy banks in other states. And that started an enormous wave of bank M&A. So when I started my career in 1997, there were north of 10,000 banks. Today, there's around 4,000. So those 6,000 banks that got consolidated, when the technology integrations happened, it was all sort of duct tape and Elmer glued together. There was never like a very cohesive software experience. And, after 20 plus years of M&A, these banks just couldn't figure out how to bring in new modern systems. And so it was just all patchwork together. And the slickest technology was going to the neobanks and the startups, not to the legacy banks. So we just said, like, this is a big problem that we need to figure out how to solve, because the banks have customers, they have relationships. Like, that's a huge competitive advantage. They've got a lower customer acquisition cost than the neobanks, but they've got to fix their tech stack. And so that's really where this mission started. And we started talking to people in Silicon Valley and venture capital about really understanding the challenges of integrating the technology and what should we do about it.
What would you say, and I know this is going to vary from bank to bank, obviously, from system, from everything else, but where do you see some of the themes of, like, let's just say the low-hanging fruit for some of these banks?
So what changed was COVID. So we started telling the banks that they needed to fix their tech stack, and frankly, very few would listen. Yeah. And they didn't really need to, because they were doing fine. But when COVID happened, a lot of these banks, their branches were closed and they couldn't originate loans or deposits. And then you had the situation where PPP, some banks could do PPP and some banks couldn't, but you basically had to find new software to start to originate PPP, and it had to happen almost immediately. Yeah. And we were able to introduce a lot of banks to providers that could help them do this, and it just changed everything. Their entire mindset changed, because not only did they do it, but they made the decision and did it in 24 to 48 hours, which is so unheard of. Like, usually these decisions take years. Yeah. And they were doing it in, frankly, minutes. And so coming out of COVID, there was an entirely different mindset as to what should be done. So to answer your question, the easy decisions were first just digital account opening, not having to go into a branch and fill out paperwork. Like those were like sort of the early wins. And then you start going into just building slick dashboards and bringing information out of Excel spreadsheets into slick interfaces that you can help manage, whether it's asset liability management or just loan covenant tracking. Like you just start to realize there's a better way to do things. And now there's like this huge revolution happening where all these tools can now be moved into agentic workflows and really start to save a lot of costs.
That's so interesting. I feel like the COVID also, some similar situations, things like in the medical community and just some of the systems where like now you're doing things after COVID where you would have never imagined, and I wouldn't have imagined that would happen so fast for some of these big hospital systems. And you're like, whoa. But that change that was kind of like forced on everybody, and truly interesting, especially for industries that are historically move very slow, like you said. Mm-hmm.
Yeah, banking is still heavily regulated, same as the healthcare system. Like the two most regulated have probably the most upside because they have the most data, but you've got to be very careful when you're talking about the secure movement of money. Like you can't just vibe code something. And so I think some of the fears around SaaS are a little bit overblown in, let's say, the medical and financial area, because you got to deal with cyber, you got to deal with secure movement of money, proprietary data. Things are very, very sensitive, highly regulated. They've got to pass a lot of check marks to be implemented, which is why once you're inside the rails, it's really hard to be ripped out.
Yeah. So we're recording this. Tomorrow, we'll start a Q2 from when we're recording this, I should say, April 1st. That being said, what's on your mind for the rest of the year? Like, how does this play out? Like, what are some of the things, the conversations that are being had over at FinTop?
I think AI is dominating what we're investing in. The two big themes, I think, going out for the next several years will be the tokenization of real-world assets, stablecoins, and then AI. Those, to me, are going to be the biggest drivers. But I think AI right now is moving so fast. We see just the most potential right now to lean in aggressively. And I think there's going to be sort of a vertical SaaS moment with AI that's happening, that there are certain players that are starting to dominate very small sector-specific AI focus versus the large language models. But we're seeing companies within, whether it's private equity or commercial lending, that are building out these little wedges of agentic workflows that are going to be extremely powerful to lowering operating costs. So most banks run with efficiency ratios in the low 50%. I think that those numbers could go into the 20s or 30% range over the next decade. And there's going to be massive efficiency gains based on just cutting costs in the back office and creating a better experience. So I'll just give you an example. One of our most recent investments was AI for commercial lending. And all these manual things that happen in the back office for a loan to be generated can now be done with agents. So everything from document intake, collection, spreading, modeling, risk assessment, credit memo creation, servicing, renewals, covenant tracking. These are very timely manual tasks that someone in the back office is checking. Is this loan in a floodplain? Yes. Where's the flood insurance? That has to be updated every year. And all these things can be done agentically. And so I think we are extremely excited about bringing these tools, allowing the lenders to be more productive, where they're not having to do these manual tasks, but they can be out in the field trying to generate more loans.
Amazing. Adam, this has been a lot of fun having you on the show today. I learned a lot. I'm sure my audience did as well. That being said, if somebody wants to follow up or learn more about FinTop, how do they do that?
Sure. I'm at adam@fintopcapital.com. I'm also active on LinkedIn if someone wants to ping me there.
Fantastic. For everybody listening, just so you know, we'll definitely add that link to LinkedIn in the show notes so that you can just click on it and connect with Adam. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. Yes, you heard me right. Daily, each and every day, we're bringing you new content, new ideas, and hopefully new inspiration and knowledge to help you along the way and on your journey as well. So, Adam, thanks again for coming on the show.
Thanks, Adam.